we're waiting for Rafi, but yeah, the viewers are on.
Hello, viewers.
But yeah, the title of the live stream is the central bankers battle for survival, because I think they're really between a rock and a hard place right
Couldn't
now.
agree more.
Yeah.
I could not agree more. It's getting worse.
Yeah. And I wanted to have you on to talk about what's going on in the, in the business, how busy you've been. And we saw the slam, paper slam on Friday. But one thing I thought was interesting was that gold actually managed to close above 2,000. And I think they're trying to close it below 2,000. So
Yeah, the round numbers are what they're always focused on. And you can see 26 represented a problem for them, as does 2,000. Those are the big psychological barriers.
Yeah, for silver, yeah.
Yeah.
I noticed silver.
The big psychological barriers that they have to continually try to defend, and because it awakens more of the masses when they see these large numbers eclipsed.
Yeah. So how do you think, because there's always this impression that the bullion banks will, always win. They go short massive amounts and then the market corrects. Do you think this time it could be different?
Yeah, I do think it can be different, because the only way you can successfully manipulate a market over an extended period of time would be to push it in the direction that it is going. But when you see the central banks buying more gold than in any time since 1967, and if you look at the numbers December to January, they've increased month over month by about 196%. So the central banks are using any sign of weakness in the market to, massively accumulate physicals. So no, I think it becomes very dangerous to be short when you have counterparties wanting to take physical delivery rather than accept cash settlement. And that, I think we're getting closer and closer to that moment when you see the massive amount of accumulation. I think it's a very risky game to play for the commercial banks.
Yeah, and I noticed as well that the Bank of England, I don't know if you've seen that, they lend out a lot of gold to the LBMA, I think. And let me just show this here to the viewers and you. I'll share it. I mean, long term, it's still quite high, but that's the Bank of England gold holdings. So it's dropped quite significantly. I think this is a million of troy ounces. So it's dropped from like 186, and it's continued to drop to 167. And didn't you say, I heard you on another interview when you're talking about how much gold is flowing out of COMEX?
Yeah, tremendous amounts of flowing out of COMEX, and have been really for the last 3 years. And it's one of these deals where, whether it be coming out of COMEX or doing the exchange for physical out of the London Metals Exchange, the big epicenters, including the ETFs, are being bled dry by the sophisticated investors. And I think it's really important that people understand what the implication of that really means, because
Sure.
oh yeah, triple digits. I got this from Keith Newmeyer, he sent it to me. When you pull metal off of the exchanges, it's not just about taking delivery of something. It's also about the fact that you are completely removing any and all industrial liquidity. So in other words, this is not about making profit for any of these players that are taking the metal off of the exchange, because in order to reintroduce it into the COMEX ecosystem, it takes a good amount of effort through reassaying and time and shipping and all of that stuff. So when it actually leaves the ecosystem, it is a one-way ticket, and it's flowing eastward. And I think that's exactly what is happening. And you're also seeing, large purchases in the United States by people who have become very interested for the first time ever as to what's happening with the regional banking system, and the fears that that's ignited underneath what represents 70% of all the small business loans and the majority of all the commercial real estate loans in this country, a fuse has been lit under these banks. And it's one thing for us to talk about the fragility of the markets, but it's another thing to talk about the banks being, on thin ice and being told that they will not be extended the same lifeline that Silicon Valley Bank was, or Signature Bank. And I think that's creating a good deal of havoc in the retail market at the same time.
Hi, Rafi.
Hey guys, what did I miss?
Hi, Rafi.
Hey Andy.
Nice to see you, buddy.
You too.
Yeah, we were just talking about central banks buying gold and also interest rates. I think Jamie Dimon and Larry Fink, they've warned that rates could stay higher for longer, and they said people need to prepare for that. Rafi, do you think the banks and people are prepared for that? A lot of people just seem to think that CPI will magically go down now to like below 2% by next year. And I think that's total rubbish, to be honest. What's your view, Rafi?
Yeah, I don't think CPI is going down from here. I think it already bottomed. I mean, I wrote about this today. I was looking at 1-year inflation expectations out from University of Michigan, also the New York Fed, and they're starting to go up. And that's usually a forward-looking indicator. So, yeah, I mean, for some reason, I kind of all the big bankers, I mean, I don't think Jamie Dimon's a good guy, but I trust him more than others for some reason. He seems to just know more, and he seems to like understand the evil of the system and kind of smirk at it. But I mean, I take what Jamie Dimon says seriously, so I would trust him.
Yeah, I think last year, about 6 months ago or more, you said there's a Force 3 hurricane coming. And he was kind of right. We had the accident in the UK with the gilt market. We had now Silicon Valley Bank. Andy, what do you think is the next accident waiting to happen?
Well, I think the commercial bank market is in big trouble. The banks that the small regional banks that hold all the commercial loans, that hold all the small business loans, are watching a mass exodus out. And Rafi talked a lot about this in yesterday's podcast with Arcadia, with the reverse repo market, where a lot of people are saying that the Fed is aiding and abetting this mass exodus out of the banks, where why would you leave your money in a regional bank that's not going to be backstopped by the Fed when you can throw it into the money market accounts that are held by the handful of 5 or 6 large commercial banks that are paying 5% and will be backstopped, we've been told, because they're too systemically important to let fail. And so, whether you look across the pond at a bank like Deutsche Bank, which people have been saying is going to go under forever, or look for the next big domino to fall, that's tough. But I think it's a foregone conclusion that we haven't seen the end of the problems with the regional banks. And really, you can't blame people for wanting to leave that inherent risk and move to the safety of banks that will be backstopped, that are paying a rate of return in their money market account much, much higher than what you're able to get in a CD without the risk. But if what Rafi was talking about happens, where the Fed wants to pretty much mothball the reverse repo market and put all that money back into the banking system, well, this might be part of the reason why you're seeing expectations of inflation skyrocketing, with close to $3 trillion hold up there that would be then pummeled into the market, creating wicked price inflation almost immediately, if not completely breaking the buck and blowing up the money market industry.
Yeah, I saw an editorial from a guy on Fox News, actually.
1 second, guys. I'll be back in 1 minute. Keep going.
EJ Antoni, Andy, and he mentioned not just that reverse repo, which is I think almost 3 trillion, but there's more as well, like another 2.5 trillion, or maybe 3 of excess reserves that the Fed's paying interest. So that it's almost like 6 trillion that the Fed, I think they used to pay 18 million prior to raising interest rates. Now they're paying like 275 billion a year to the banks. And that money is going to flow into the system.
Yeah, absolutely. And this is when you get to the point where you wonder if some of these decisions that are being made that have been so counterintuitive for so long are intended. Was weaponizing of the dollar intended? Was blowing up the regional banks intended? The moves that they are making. I mean, there's really no reason to stay inside of a systemically risky bank when you can move to the safety of an institution that everyone thought was too risky to begin with, but now we're told because they're so risky, they're actually safe, but paying a much higher rate of return. I mean, it's so counterintuitive to what you would want to do if you wanted to heal the system. It's creating, I think, a tremendous amount of anxiety, a tremendous amount of fear, to the point where our company has added north of 12,000 clients in 30 days. It's not just money markets they're putting their money into. It's things like gold and silver, which I think will be emblematic of a buzz phrase, a dirty buzz phrase in the next several years, and that is counterparty risk. And the removal of counterparty risk by holding gold and silver in your own possession is something that it's really been something amazing to see over the last 3 or 4 weeks, because there's one thing about being motivated by FOMO or wanting to profit. It's another thing when you think the money you've worked for your whole life, that you're saving, that runs your business, that, you know, your retirement accounts and or your savings account, if it's safe. And I think you can see by the exodus out of the banks, people are voting with their feet. And well, the Fed is aiding and abetting this exodus, if you look at it that way, and it's going to create a very big problem that I do not think we've seen the last of. It's just a little bit of a respite here. We got earnings coming out here very soon, and I think that will expose the emperor not wearing anything in the way of clothing on several of these banks that are hanging on by a thread.
Yeah, I wanted to just touch upon this de-dollarization. I know Rafi doesn't think, or maybe I'm wrong, you don't think it's moving, you know, the dollar. I'm not saying the dollar is going to be not used anymore, but we see here Brazil's Lula criticizes US dollar and IMF during China visit. This is from France 24, and he went there for the annual meeting of the National Development Bank, which is the BRICS bank. And I thought this was interesting here, what he said. And he said, why should every country have to be tied to the dollar for trade? Who decided the dollar would be the world's currency? Lula said in the Shanghai ceremony. I mean, the Bretton Woods Agreement in 1944 decided that, but I guess you could argue that Nixon like ripped that agreement up. So in a way, he's got a point. It's like the US does not, the world, there's no legal tender laws for the world. So first I'd like to ask Rafi what he thinks about that, and then we'll go over to.
Well, so my position is a little bit more nuanced. I don't totally discount this as irrelevant. I'm not going to ignore it. I do think it's important. But like when let's say the president of Brazil or the president of any country complains about the dollar's special privilege, that's true. The dollar does have special privilege, but that's because of the pyramidal system that Bretton Woods set up, that Nixon basically hollowed out, but still the structure is the same. You know, it's just not redeemable for any content anymore. I mean, the ones redeeming it now are people like Andy, who, you know, can sell gold and silver for dollars still. That exchange rate is the redemption. I mean, that's the Bretton Woods system now. So when the president of Brazil complains about this, the question is like, what's he going to do about it? Is he going to? You can't replace the dollar with any of his currencies, because his currency is within the pyramidal structure, and then if he uses his currency instead of a dollar, then the exchange rate between the Brazilian real and the dollar is going to get all messed up and mess up his whole trade relations with everybody. So the only way to get around the dollar is to get below it in the pyramid, and below the dollar is gold and silver. It's not another currency.
Brazil actually increased its gold reserves by 60% in 2021. Don't know if they've been buying anymore, but I think they're making a move out of the dollar. I know, you know, they want to trade in their own currencies with the Chinese. So I guess the dollar will always be there in the background. So what's your view on that, Andy?
Yeah, Rafi said something relevant there about the reason the gold window was closed was because everyone was running, in particular, De Gaulle from France, proving the thesis that redeemable currencies are redeemed, convertible currencies convert. And that is why, and I agree with him, in and of themselves, these countries are not able to stand on their own 2 feet. But let's be honest, what does make the dollar the world reserve? I mean, there are several things. They have the most liquid markets and everyone owns it and has since the end of World War II. But by and large, the reason people are forced to hold it is because OPEC and Saudi Arabia have agreed to sell oil globally through dollars, and has represented about 85% of all oil sales for the last 50 years has been in dollars. And I think when you look at this as a slow moving process, a very methodical process of putting pieces into place, not only in terms of mutual cooperation, i.e. countries like Iran and Saudi Arabia striking deals with each other after centuries of hatred, Sunni and Shiite, for the common good, or all of these deals that are being made, like you mentioned, Brazil agreeing to deal on the SIP system with China in yuan instead of in dollars as the second largest exporter of corn in the world. There are a lot of these pieces that are being put into place, and it is my contention that what will make it work is when this unification of all of these countries get together and issue a currency that is indeed pegged to gold, but not convertible. It will use the technology of blockchain to show the immutability and or the veracity of what is proposed to be held backing the system. And if they do it right, in conjunction with Saudi Arabia shedding its mandate of only taking dollars for oil, or OPEC rather, in doing such after they have all of these pieces in place. And look at the pieces that are formulating. You have all the OPEC countries on the Belt Road. You have Saudi Arabia, who has applied to BRICS. You have Saudi Arabia, who just applied to the Shanghai Cooperation Organization. You have Saudi Arabia being protected by Russia, and by extension now the Shanghai Cooperation Organization being a military organization, China. You also have the fact that they told the folks in Davos they're open to taking other currencies. This is not something that's going to happen immediately, but you can see the pieces are being put into place. And you're even beginning to see our allies exit stage left with Macron and signing a 51-point agreement with China that ranged from 5G to military engagement, selling a massive liquid natural gas deal and paying for it in yuan rather than in dollars. The pieces are slowly being put into place, because if you are the rest of the world, regardless of the fact that we have the most sophisticated markets and the most liquid markets, and I understand everything that people would push back against this, would say, but why would anyone in the world, when you signal to the world that we cannot choose austerity over inflation, we can't do that. The tough decisions, just raising rates just a little bit, blows up the entire global banking system. So they will do, as Rafi said, inflation is projected to pick up, and I think it will considerably pick up. Why would anyone want to sell us anything for a dollar that is continuing to be inflated? And I think that these relationships that are being made to break the hegemony of the West, that's the rallying cry, and it is increasing ever since the weaponization of the dollar. It is increasing, but by the same token, I think the glue that makes it stick is the pegging of commodities. As we've been told, the BRICS currency or the Shanghai Cooperation Organization settlement currency will have a pegging to commodities, and in particular, most likely gold. And that's why you're seeing countries like Turkey, who has applied to BRICS, buy more gold than anyone in the world in the last year and a half, and countries like Brazil. But if you look at a lot of the countries on the 60 list of those that want to join BRICS, their reserves as a percentage of total assets is amazingly high in terms of gold. These countries are valuing and buying gold because they realize it will give them a seat at the table. And I don't think it will be convertible. What it will offer the world will be stability and transparency, like we
Did he cut out for you too?
won at the end of World War II, the informal Bretton Woods, too, at the end of the of the gold window or the transition to the petrodollar, this now being the dawn of Bretton Woods 3, a system that will be defined by commodities and most likely transparency using blockchain technology. So while it isn't going to happen like that until it does happen like that, I think that this growing trend of countries moving away from the dollar should be very alarming to people. And I think illuminating, at least in terms of the motivations of all of these countries to have stability in the currency in which that they sell their commodities for.
I just want to share this here because I think this is also important. It's not just about de-dollarization, but how much the U.S. is planning to, borrow and spend. Just going to play this quickly.
You're going to drive the debt from somewhere around 32 trillion up to about $50 trillion, correct?
Yes, but what I believe is the single most important metric for judging the fiscal stance of the country is real net interest as a share of GDP.
Okay.
We have
so are you concerned
large
when you're taking the debt from 32 to $50 trillion? Are you concerned who's going to buy that debt? And also at what rate they'll expect to be compensated for buying riskier and riskier debt? Are you concerned about that?
Well, if the real net interest cost of the debt remains low relative to GDP, and we're on a sustainable fiscal.
But we're not on a sustainable path. You're going to drive the debt from somewhere around 32 trillion up to.
So I think that's pretty amazing.
That's the point, really.
And no one
wants to buy our debt or our currency that's being destroyed.
And the thing is, she's
hard to watch. This is hard to watch.
She seems to be assuming that interest rates are going to stay low forever. And I don't think they will. I think we bottomed in 2021 and we got 40 years of a bear market in bonds. That's the way I see it. So that's the other thing that I think it's not just the de-dollarization. Why would you want to keep the reserve? You can still trade in dollars, but why would you want to keep excess dollars when the US is just like spending like a drunken sailor?
That is why they're de-dollarizing, on top of the hypocrisy and the hegemony and the sanctions and the bullying and the bombing and all of the things. I mean, look what China's doing. They're going into these countries. Instead of bullying them, they're building infrastructure. They're creating unions. They're building bridges and ports and railways and roads and oil rigs and refineries and gold mines. And they're building infrastructure and cooperation amongst these countries. And when they all join together, they will have GDP and military might greater than the United States. Maybe that's when the switch flips, not until. And I agree, each one of these countries in and of themselves cannot stand up against what the West would retaliate against or would have to offer against. But when you put them all together, it becomes a much easier task, and one that I think really attracts a lot of these countries that are just sick and tired of being under the Western thumb for centuries.
We've got a couple of super chats here. Jake's Custom Parts. Thank you, Jake. He says, Mario, can you ask Rafi and Andy their opinions on why more physical metals is leaving the LBMA versus COMEX? Thanks.
I don't really know. I mean, the LBMA hasn't been losing much silver in the last, let's say, 3 or 4 months. It's been pretty steady, and gold has been going down a little bit. I mean, these figures come out once a month, and I'm not even sure if I trust them. But where is it going? I don't know. Does London and New York, they trade back and forth with each other, right? We saw that in March 2020, a huge amount of gold just like flooded into New York because of a premium in New York over London. So it just goes back and forth depending on what the premium is between spot gold and COMEX gold, from my understanding.
Maybe the big money in the US prefer using the COMEX and they're taking delivery, which is not usual, right, Andy? Because the COMEX is not really a physical market. What's your take on that?
Well, it wasn't. It was very unusual until 2020, when that year alone, this third group of reportables started to drain the COMEX, we saw more silver delivered than you typically see in a decade. You saw more gold delivered than the Bank of Japan holds in their official reserves. Maybe it's just that the COMEX market gets more attention than the LBMA. I mean, the LBMA came out and said publicly, if we see silver withdrawals in 23 like we did in 22, we could run out of the ability to deliver silver. Look at their stockpiles, not just of precious metals, zinc and aluminum, down 90% in zinc and like 75 in aluminum. This is a very methodical process. They've drained the COMEX, they're draining the LBMA, they're draining the ETFs. This has to be done very methodically and not fast enough to cut off their nose to spite their face. But I guess maybe it's just because the COMEX is where people pay a lot closer attention. Yeah. And you know, we're so low in the registered category in silver, as an example. So last I looked, about 39 million ounces. Well, look, India imported 304 million last year. We're getting to a point where if you continue to drain the COMEX, it will get too much attention, and all of a sudden we then start to crowd ourselves out of what we're trying to do, because everyone will catch on. Well, look, COMEX is being bled dry by the sophisticated money, and it really has been. But I think they're being a little bit more cautious and methodical in the way that they're doing it.
Well, about the LBMA, I mean, the Bank of England works very closely with the LBMA. So you could argue that the gold is flowing out of the LBMA here. I think Andy and I were looking at this before you came on, Rafi. So it's gone from 186 million ounces November 21, and it's now down to 167 million.
That's gold holdings of the Bank of England there?
Yeah.
Okay, I didn't know they were so transparent. Okay.
Yeah, I mean, this is up until March, 1st of March. So it'll be interesting to keep an eye on it.
Mm-hmm.
The question is, why is the West selling their gold and shedding their gold holdings when the East is accumulating? And it's just very, you know, he who has the gold makes the rules. That's been the law of history. It's interesting when you see it should be the opposite of that. These countries should be accumulating gold and adding gold to their holdings like the rest of the world is, instead of selling it on a one-way ticket eastward. It'll never come back.
I think there's you know, these globalists, they've had this plan to balance the world. I heard a speech by James Wolfenson about 12 years ago at the Stanford Business School. And he said that the plan, and he was the head of the World Bank, and he worked for on Wall Street, all the big banks. And he said the objective is to balance things out and to have a shift, like the West owns 80% of everything, but and the rest of the world 20%. He said that in the 50s and 60s, and he said by I think 2050 it's going to be 65 the rest of the world and 35 the West. So it's weird. I think these people actually want to do this because they don't care about nations, you know, that they live in. They just care about how much they make and who they control. So if the gold flows elsewhere, they don't seem to care, which I think it's really bad for the people living here in the UK or in the US or anywhere else. Got a question here. Thank you, Dimitri, for your super chat. Says, gentlemen, is there a danger of metals, including in the US? Rafi, is it worth just buying gold in Israel rather than trying to move it from the US?
You're asking me how to buy gold in Israel? That's a pretty niche question. It's not easy. There's one company that I mean, you could import it, but then it's like the tax authorities here, they're really anal and scary. And if you order any size, you know, you order a small amount, they're just gonna make you pay taxes up the wazoo for it. And if you order a big amount, then they're really gonna, you know, question you and hound you and all very unpleasant stuff. So there's one company that does it through the Southern Port. And they hold it for you for 3 months and take care of all the bureaucracy for you, and then they charge a premium, so it's a lot more expensive to get it in Israel. You know, the way you could do is you could go to America, make an order from Miles Franklin, and then take what you can through the airport.
Yeah. Oh, Andy, he's concerned as well, I guess, about confiscation. He asked if there's any danger to gold in the US What's your view on that?
I've always felt that they will confiscate the ETFs. They can look the world in the face and say, what? Well, we didn't do anything. All we did is what the prospectuses allow us to do. I mean, you have basically the largest stockpile of silver in the world being held by a bank that just paid $920 million for suppressing the metals market, yet somehow is still being allowed to be the administrator of the world's largest silver trust, amongst a few others. And HSBC Bank, the custodian of GLD, I mean, God knows how many billions of dollars they've paid in fines for manipulation of markets and laundering drug money and all of the things that they have done, yet they're allowed to do this. So on a Friday night, they could just close those two funds down, confiscate the metal within it, look the world in the face and say, we didn't make holding gold and silver illegal. We're not activating eminent domain. We didn't infringe any civil liberties or break any laws. It to me is the way for them to have their cake and eat it too. When he confiscated gold in 33, everyone owned it. It was money, it was currency. And now, you know, less than 1% of the public has any gold or silver in this country. And so the unintended consequences of doing that, when countries like Russia remove VAT taxes to incentivize their population to buy it, where China promotes it on the back of buses, and in every single shopping center you walk into, there's advertisements or shops to buy gold. And I think when the world is accumulating gold and the United States, which is clinging to the fact that it is the center of free trade in the world reserve currency, if we were to activate eminent domain and employ Venezuelan style nationalization of assets, it's game over. We have bigger problems. So I think that's, you know, to me, one of the things about the ETFs that is, to me, Occam's razor. It's the most logical spot for them to come in and take it and have their cake and eat it too. So I'm less worried about confiscation than I am counterparty risk if all hell breaks loose. So holding gold and silver in your own possession, removal of counterparty risk. And what does Doug Casey say? They're the only assets that are not simultaneously someone else's liability. So I'm less worried about confiscation, more worried about the system breaking down. And quite frankly, I think you have a better chance of being ripped off by the system than you do someone coming into your home looking for gold and silver.
Yeah, I totally agree with Andy here. And if you look at it from the perspective of a government, if they're in a dollar crisis and the dollar is tanking and they need gold to, like, you know, I don't know, recapitalize the Fed or whatever, however they want to do it, they can easily just take the ETFs, no questions. That nothing's going to happen to them. They're just going to do it. And it's really simple to, like, just grab all that gold and stuff it into Fort Knox or the Fed's basement or whatever they do with it and just take it. I mean, they've done it. They did it with the Russian ETFs when Russia invaded Ukraine. They just took the ETFs and said, you can't have that anymore. It's worth zero. I mean, that was it. So yeah, if they could do it with ERUS and RSX, they could do it with GLD and SLV. It'll be easy.
Yeah, I think Clive, I don't know if you know Clive, Andy, Clive Thompson. I've interviewed him a few times, and he said the same thing. They could take the gold or the silver from the ETFs, and that's interesting. That's another reason not to buy into ETFs.
Yeah, they don't have the manpower to go knocking on people's doors and say, "Do you have any coins? Let me see your attic."
And not only that, in
especially about the
1933,
guns Americans own.
it's not even the fact that the doors they would be knocking on have an NRA sticker on the front window. It's that there was a much greater degree of patriotism and nationalism back in 33 and for the greater good, whereas
people were donating the gold. They
Yes.
were just they were trying to help their country. That's gone now.
Yes, it's filled with skepticism and mistrust. I mean, we don't trust the FBI, we don't trust the Justice Department, we don't trust anything any longer, and that's a shame. Really is a shame, because if you take the United out of the United States, then you know it becomes a place that a lot of us don't recognize.
I remember it during the Asian currency crisis. I think it was 97 or 98. And the Korean housewives, they're going to the central bank and giving their gold jewelry to the bank, to the central bank. So, yeah. Chris Conman, thank you for your super chat. He's got a question. I guess we can all answer this. I'll let Rafi start, then Andy, then I'll answer it if it's different from your answers. It's what could the U.S. government do to combat de-dollarization?
I don't think there's any. They could theoretically stop spending, and let the banking system fall. But they're not going to do that. So I don't think there's anything they could do. They could threaten, and they could threaten to bomb people, but they do that all the time anyway. So I don't think that's going to change much. There's nothing they could do now. I think the cake is baked, and we're in de-dollarization. It's a process that is taking over by itself now, and there's nothing they could do.
Andy?
You know, I was asked this question in an interview I did with Kitco, and the only thing that came to my mind was the report written by the International Monetary Fund a month or so ago, which was titled something to the extent of "Gold as an International Reserve, a barbarous relic no more." Well, I mean, I think the IMF is, you know, the US has veto power there. It's kind of like this is a poor analogy, but more like the BRICS of the West. And if all of these countries were to pledge gold to a special drawing rights and issue a gold-backed currency to compete with the commodity-backed proposed currencies coming out of the East, that would do it. I mean, hear it again. I mean, it just boils down to the fact, and that sidesteps a lot of the obvious questions about the debt and all of the things associated with the dollar. But I think the bottom line here is that we have to find a way to gain confidence in the currency again. And just because it's the most liquid, if it really is becoming worthless, and really it's only worth something because everyone trades in it. Well, you know, I think if all of these countries just shut out the West and start over on their own with the new system, so to speak, as your Nasera Jacera moment where they just default on their obligations, we're not paying, we're starting over. I mean, it all implies a great reset to some degree, and to issue a new currency pegged to commodities at, like Rafi said. Other than that, I don't see a way that you will stop this exodus out of the dollar, which is, you know, the Fed realizes that if they really were to get tough on inflation and try austerity, try to clean up their balance sheet, try to create a surplus and stop spending, everything would absolutely blow up. And that's what I've argued for a very long time. Maybe even the reason they've weaponized the dollar is to find a villain in all of this. And that villain are those sons of bitches, Xi Jinping and Putin and OPEC. They did this to us. They dumped the dollar. They did it to us. Now let's start over with a new system. Maybe that's why they did it. Maybe that's why they're stupid enough to have interest rates above what the banks are able to pay the depositors, blowing up the 5,000 regional banks from the inside, blowing up all the commercial real estate, blowing up the whole thing. And whether it emanates from the outside or from the inside, I think in order to get to that point where we can start over with something backing a system, not convertible, but showing honesty and transparency, maybe you stem the tide. But either way, I don't see a way of getting to that point without bottoming out first. I mean, that's just my own personal opinion. I hope I'm wrong.
Yeah, the other thing I think the US needs to do to stop de-dollarization is to stop sanctioning other countries and make peace, join the BRICS. But that will never happen, I don't think. So like Rafi said, it's baked in the cake. So there you go.
Hey, Andy, can I ask you a question?
Please.
You were saying that you don't think that that a currency is going to be convertible in the end, but it's going to be backed, or maybe like a cryptocurrency is going, or a blockchain is going to manage it or something. Why don't you see in the end gold and silver just returning fully convertible and just the entire thing blowing apart? Because frankly, when I'm imagining the end game, the scariest end game for me is when one of these big conglomerates, either maybe Russia or China or BRICS or whatever, some kind of huge national organization is going to survive, and then they're going to enslave us with their new currency. I mean, it's not like any of them are honest. So
I agree with that, and that's a great point. I do agree with that, but this is the reason why I think it will go like this. So you got the digital yuan, which has settled the majority of all the trades and settled contracts on the Belt Road Initiative for the last several years. It's done north of 30 billion in transactions. They used it at the Beijing Olympics. I believe they will use the rails of the digital yuan to show the transparency, the immutability, the veracity of what every one of these countries pledge to the system, have it audited, have it held in vaults that can be audited by nations or however they decide to do it. It has to be legit. And the reason I think that it won't be convertible is that here again, I mean, De Gaulle proved that convertible currencies convert. And I just think that they will use distributed ledger technology to show what is pegged there and give the currency stability rather than people walking around with gold and silver in their pockets. So, you know, maybe it does come to that. Maybe it does come to the fact that we're all walking around with gold and silver in our pocket. But I think in order for all of these countries to be able to have equal footing at the table, for example, the BRICS nations, they rotate their presidency every single year. There's not one central dominant player there, even though China is pushing a lot of this. I think they will do mutual cooperation. And if I were thinking of a way to make it work, because here again, people are just taught to hoard gold and silver. It's not a good way for a currency to work. If everyone's holding gold and silver, you don't have enough velocity. But instead, if you peg it to gold and silver, and you know, maybe 20% of every new currency unit is pegged to gold at whatever price it may be, or whatever commodity that they use, because you know, they did say the folks behind BRICS, the finance minister of Russia said it will be pegged to a basket of commodities and local currencies. I just think if you use distributed ledger technology appropriately, if you house it and allow it to be audited appropriately, what it will give will be stability to a system that has none. And so, yeah, I don't think it will be converted, but I do think it will be back. Now, that's just my own opinion. I just think it's the perfect way to roll out a CBDC under the guise of transparency and stability, backing a new system. I just don't think that they will ever allow those, whatever it is, backing it to be convertible. Maybe I'm wrong.
Another super chat here, Dmitry Shmerkovich. Thank you. Do you think they would confiscate also the minor GDX and GDXJ, the minor ETFs?
I don't know about that. I think the countries and where they're located, if not in a friendly place, could very easily nationalize them at a period of time when metals are going to the moon and these countries are struggling. Sure. I mean, you know, what's going on, you know, Peru and Mexico just applied to BRICS. So, yeah, I could see mines being nationalized, but I don't think they'll have the authority to confiscate those. Maybe those in the US, maybe.
I think Poland nationalized pensions some years ago when they had a problem there. So I guess they could nationalize all the 401ks or IRAs as well.
Well, that was a law. In fact, in 2009, I sold my IRA because of that. There was a bill that made it down to the House floor. It was vetoed, but it was when there was $17 trillion in debt and almost on the national debt and almost the same amount in IRAs. And the bill was, if this ever happens again and the dollar and the treasury market are imploding, we will confiscate IRAs, guarantee the principal by putting it into an annuity backed by US treasuries. Now it got voted down, but to me, that was the genie being let out of the bottle. Of course they'll do that. If the shit hits the fan that bad, of course they'll do those kinds of things.
Especially when Yellen's talking about 50 trillion national debt, and that's the CBO forecast. And usually the forecasts are like way below the reality. Andy, you might know this. I'm not too sure. China's CIPS payment system, does it work worldwide or is it just in China?
Well, no, it does work. I guess it's a permission-based system, but I was under the impression that a lot of the deal that they just struck with Brazil will be used on the CIPS system. It's called cross interbank payment system. So it is designed to mirror SWIFT and to be used with countries as an alternative to the SWIFT system.
Okay, we got another super chat question. Thank you, Chris Conman. Do you think the best medicine for the US government to swallow would be to default on US debt? Well, that's a good question, especially that we've got this debt ceiling impasse. What do you guys think?
Yeah, that would be the most honest thing to do, but it's not like it would be easy. I mean, it would mean rioting in the streets by like pretty much throughout the entire country. because people's retirement accounts would all be gone. And you'd have starving, elderly people in the streets. I mean, it would be chaos. But eventually, after the initial chaos, things would heal. But it's not people would die. I mean, it's not.
It would be worse than Beirut, Lebanon, wouldn't it?
Yeah, it'll be pretty bad.
Well, I mean, think about it for a moment. You got Social Security, they just came out with the budget, is $76 trillion underfunded. 76 trillion. Reuters said 2 weeks ago it'll be completely bankrupt by 2033 or somewhere in that neighborhood. Richard Russell, my mentor, always used to say it's inflate or die, period. Either inflate or default, period. And so, yeah, I mean, look, when you talk about this bullshit debt ceiling, I think nothing has angered me more than what I saw when Janet Yellen raised the debt ceiling last time. She said, we need to take extraordinary measures to raise the debt ceiling. And just like Social Security is funded with 76 trillion in IOUs. And remember, 1 trillion seconds ago was 31,688 years ago. Those extraordinary measures, which were very difficult for me to find, but I did find it on a Yahoo Finance article. And the article says that she borrowed money from the Postal Services Retirement Fund, the Disabled Veterans Retirement Fund, and the Civil Servants Retirement Fund. So she's pillaging the retirement funds of people who have dedicated their life work to this country in order to, in the very next article, give 114 billion to the Ukraine, including pensions to their government, when we have a $1.75 trillion pension shortfall in this country, where $5 billion to build a border wall to stop people from coming in illegally and killing our children with fentanyl is too expensive. The decisions that are being made by this country are absolutely ridiculous. And the spending, as in that last clip that you just showed, is absolutely ridiculous. And that is, you're going to reach a point where either the US defaults or everyone dumps dollars in favor of a new system. And what would be the linchpin of that system? The oil standard. Well, what is Saudi Arabia doing? They're joining with this group of countries that amounts to 80% of humanity that's not going green, and we are. And they're being protected by extension by Russia and by China. They signed an agreement with Russia. They joined the Shanghai Cooperation Organization. The pieces are being put into place. It's a game of Jenga. And at some point, someone pulls out the wrong piece. Now, like the perfect example is the president of Kenya, who says, we're going to buy oil from the UAE and Saudi Arabia and Kenyan shillings. Okay, that's just one little piece. But when he comes out and says, and I warn all of you, my countrymen who hold dollars, you must do what you need to do or you will experience losses, because in a few weeks, this entire system will be different. Well, what does that mean? I mean, is that the final piece? I don't know. The point of it is, little by little by little by little, all of these countries are joining together. And when you talk about the sanctions, Macron told Politico magazine, and he told Xi Jinping in his article a week ago, that not only are the countries pissed off about the Western sanctions, the businesses and the banks are too. It was a French bank that was fined $4 billion a year or two ago for trading with an Iranian company.
It's cut off.
And I do believe it will be commodities and transparency a la blockchain, and the veracity of it and the immutability of it guaranteed by auditing and for the whole world to see. You don't have to make it convertible if everyone knows it's there. And you have, just like they send in a commission into Iran to make sure that they're not building a nuclear bomb. Okay, well, same thing. You put people in there that can independently verify that, yeah, it's all there. You have a system that will, I think, overthrow the dollar in a matter of moments. When Saudi Arabia says we're no longer taking dollars for oil, every country on the planet will dump them. Who's held them to buy oil for no other reason for 50 years? So I don't know what the catalyst is, what the fuse is. And I understand all the arguments against the dollar being the place to be, but all things change. The best laid plans need to be reevaluated, and the rest of the world seems to have already started reevaluating their plans.
Yeah, there another super chat from Silver Sonic. Thank you. He's saying that Ireland did a pension levy of 0.6%, a year for 4 years from 2011 to 2014. I guess that's another way to, because I think when the Irish banking system collapsed, it was Paddy Power, a betting company. They had the most cash in the country. So yeah, that's the other reason why having paper assets in the system is dangerous, because they can come after it and tax you. And that's why I think having some physical gold and silver outside the system is a good thing. Someone asked a question here. Maybe you guys have a view on it. They said that, I don't know if it's in the States, but it could be here as well, that legally we're not supposed to pay income tax. And I've heard this many times before. I've known about this. I know that Peter Schiff's dad, I think his name was Adam Schiff.
Irwin
Schiff. Yeah, he got in trouble for that. Yes, I mean, here in the UK, if you have a national insurance card, yeah, you're gonna have to declare your tax. In the US as well, once you file your tax, you're gonna have to keep doing it. And I think legally we shouldn't pay tax, but it's if you want to like end up in jail like Irwin Schiff. What do you guys think about that topic?
I think the 85,000 new IRS agents they hired would disagree with that. And maybe when the whole system blows up and they start again, modern monetary theory would say, why the hell do you even need to collect taxes when you can just print your money? And that's what Lael Brainerd's whole thesis is, who was at the Treasury, then the Fed, and now is advising the president on she wants to get rid of all the banks. So maybe light a fuse under the regional banks, push everyone into the commercial banks, blow the whole damn system up, and then come in and start over modern monetary theory. And then there's no IRS. But until that happens, unless you want to, eat your dinner from your jail cell, I would strongly suggest paying your taxes.
Yeah, that's right. Rafi?
Yeah, I remember Peter talking about this in a lot of his radio shows and podcasts. Like, he respected his father for his moral stance, and like it set a good example for him. But he from what I remember of his tone, like he resented his father for ruining it for not having a relationship with him because he spent all of his time in jail. I mean, I understand that as a son, so it's hard. You don't want to do that. Write books about it, complain, but like pay the taxes.
Yeah, I think actually central banking and the fiat currency system, they need a good tax collection agency, because it's all part of keeping. Yeah, it kind of keeps the currency, gives it value, because you have to save in that currency to pay the tax.
That's the freedom. That's the freedom, and why I keep saying hyperinflation is not the enemy. It's our friend. Because once it happens, there's no tax collection anymore. There's no point to tax collection, and they just there's no tax agent because they can't be paid either. So it frees everything, and then it's up to us to figure out how to reorganize society. And I hope there's no BRICS. I hope Xi Jinping and Putin are not powerful, and I want a complete breakdown, because that's gives us the best opportunity to make something that's worth living for.
Well, I agree with you, Rafi. And the reason we touch upon, I think, the BRICS and China and Russia is because they might trigger the collapse of the whole system. They might not survive either. And maybe that's why they're accumulating gold. But anyway, we've got another super chat. Is there a dagger to mining? Mining sucks. From confiscation or mining stocks, he means. Well, we spoke about that already, didn't we? Yeah. So I mean, the thing about mining stocks, I guess, if you're gonna have invest or speculate really in mining stocks, you diversify. So you don't just buy companies that only operate, let's say, in somewhere in Africa, or just somewhere in Canada. You just put it, diversify geographically, I would say, is the best thing.
Actually, Africa might even be the safest place because their governments are very, very weak. And they're corrupt on a much more petty level. Like the corruption in the West and Canada and the US is much more sophisticated and much more all encompassing. Whereas like in Canada and in Africa, you could probably like pay off one or two guys and with a few gold coins and they'll leave you alone. You know?
That's a good point, actually. Andy, what do you think about that? Do you ever get involved in mining stocks?
Yeah, I do. I've worked with the folks at Sprott for a very long time. We've had a great relationship, and I have a managed account with them there. It's kind of a quid pro quo. We've represented their clients for a very long time in physical metals, so I believe in mining shares, but I put them in the top 10% of my financial pyramid, up at the peak, where it's a far more speculative asset that I think has tremendous potential, but I'm not willing to put it in the base of my pyramid, which would be comprised of physical metals, paid for real estate, cash, whatnot. And the theory behind it is if you lose all of it up there, it's not going to devastate you. But the potential you find in mining shares is extraordinary. When the market collapsed in 1929, the number one stock on the entire exchange was Homestake Mining. I had a client of mine, God rest his soul, he passed away. His name was John Tomchek, and he told me, he's a geologist by trade. He says, "How much money do you have?" I said, "I have $9,000." This was 1990 or 1991, maybe 92 at the latest. And he said to me, "Put it all into this mining share." And I said, "Okay." And it was called Western Copper, and I bought it for, I don't know, 6 or 7 cents. It got bought several months later, or changed its name to Western Silver, then got bought by Glamis for $6 or $7, which got bought by Goldcorp subsequently for almost 30. And I turned $9,000 into $650,000 when I was 22 years old. I mean, this is the kind of potential you can make in mining shares, but it cuts both ways. Now, that was a junior stock, right? But the big majors, when things really get scary, you may see a lot of the money go flowing into the big majors. You can make massive returns, but they're very speculative. And I think there is room for them, but just put them up in the top portion of your pyramid, allocate wisely. Do not invert your pyramid to speculation, I guess is what I'm getting at. They might be related, mining shares and physical gold, but they're not brother and sister. They're distant cousins, in my opinion.
Yeah, and the junior exploration companies, they're very dangerous, and very few of them succeed. But like you said, you can make 100 bagger.
Right, 1 in 33 years, so it's not very likely, but you do hit it, you'll make a fortune.
Yeah, I just wanted to show you guys. I've got a newspaper here from November 13th, 1979, the Times, right? And there's an article here, "Grim Economic Warning from Mrs. Thatcher." And I started reading this and I thought it was quite amazing, because she said here that they need to keep targeting the money supply, money supply growth. She didn't even talk about CPI or IPI. She said, we need to bring down the money supply to stop the inflation. And I thought that was interesting. So
People had a lot more common sense back then, it seems.
yeah. And there's also an article, because I got a friend of mine gave it to me for my birthday, but it's the same copy. And there's an article here about Krugerrand sales in the UK.
Mhm.
And it's funny because this is November 13th, 1979. And that's why I tell people you need to be in gold and silver, because sometimes you get huge moves. I think I read there in the financial part of the paper, gold was $383 November 13th, 1979. By January 20th, it was almost at 900. It's quite amazing.
Yeah, that's the kind of leverage you can get in a market that is driven by concern and fear.
Yeah.
It's very quick, no question about it. And as Rafi's shirt would attest to, they did have more common sense back then. Inflation, according to Austrian economics, is always a monetary event. It's an increase in the money supply. So you want deflation, you decrease the money supply, and that's just what it is. And we've been dumbed down into believing that Putin caused inflation. And when they said that, it made me think they are looking for a villain, and maybe that's why they weaponized the dollar, so that they could incentivize this de-dollarization and point to a villain, point to an event that reset the system. I mean, how do you pay off? I'll ask Rafi this question, one of the smartest guys out there. How do you pay off what amounts to $150 trillion in funded and unfunded liabilities? How do you service that? And especially as rates rise in a country where the largest asset, according to the US balance sheet, is student debt, and where these entitlements like Social Security are nearly $70 trillion underfunded and are coming to that breaking point where so many of these pensions and so many of the things that are out there that are unfunded are based upon a certain set of parameters, projections that assume rates will be in this range. What happens if we get outside that range? What happens to the systemic chain reaction? And I think that this is a scary time where maybe, just maybe, they realize they're smart enough to realize that there is an end game, as Rafi talks about, but what is the catalyst that gets there? Do we fall on the sword ourselves and default, or do we point to an event or incite a villain to do that for us, so that we don't have to fall on the sword and be written about in history books as those few people at the Fed or the Treasury that destroyed everything good in this country?
Yeah, I'm sure they'll find a scapegoat. Like maybe it will be the Taiwan crisis or something like that. What do you think, Rafi?
What's going to be the scapegoat and I don't know. By the time it actually happens, and and the dollar starts to hyperinflate, I don't think anyone's going to believe any story that they tell. I mean, you can already see like nobody's taking them seriously now, especially since 2020 and everything that happened in the world since then. It's clear. It's a lot clearer to a lot more people now that basically everything they say is a lie. And some people still believe in it, and but when they're panicking out of their currency and into real money, the propaganda is not going to matter anymore, I don't think.
We've got,
and what Rafi is saying again supports all of my belief that what makes a currency that's not backed by anything valuable? It's credibility, it's trust. And we have lost trust in the people leading this country and the monetary authorities behind the currency. So
yeah, that's
all of these things.
Germany, isn't it? And during the Weimar Republic, there was political chaos in Germany. We're getting that ingredient. Sorry to interrupt you.
No. I mean, that's the point, though. I mean, that's just the point. All of these things. It's not just the sanctions. It's not just the inflation. It's not just all of the things that we could point to here that are tangible, but it's also the fact that no one trusts us anymore, and that's the shame of it all. That when you start to lose trust in the world reserve currency that is fiat, and they've signaled by putting 400 billion back onto the balance sheet in a month, erasing almost 2/3 of all the quantitative tightening, that they're not going to tighten. They're not going to blow it up at their own hands. So at what point does the world just stop trusting? And that's another piece of the puzzle that I think feeds into this de-dollarization.
So we got last super chat here. Sorry, Rafi. From Chris Conman. Thank you, Chris. Why are central banks afraid of deflation? Isn't that good for us citizens? I'll let you answer that, Rafi. And
the quick answer is because deflation will destroy their banking buddies, and they're all destroyed. The Fed gets destroyed, so they can't have that happen.
Yeah, in the fiat currency world, you have to keep increasing the debt. So deflation means you destroy the debt. And we've actually, technically, we've had deflation since the middle of last year. And people might ask, well, but we've had CPI going up. But I would say that the prices that have dropped were the financial asset prices like stocks and bonds. Don't forget, in 2022, you had the worst year for the stock bond model, and commodities actually finished up on the year.
Yeah, I mean, thinking a very basic answer to that would be, it would be great to have negative inflation, because the lower the cost of living, the higher the standard of living. And I mean, that would just be, I mean, can you imagine any CEO like, well, you know, like anyone, Elon Musk standing up on stage and saying it is our goal to lose 2% per year every single year in the value of our corporation? I mean, on a basic level, we should have no inflation. Why they think we should have 2%. But when you expand credit the way that we have, to the degree that we have, a massive contraction in credit, which always follows the massive expansion in credit, or this deflationary wave, it creates havoc. Like Rafi said, it will destroy the banks, and it will blow up the bond market, and will blow everything up as the cost of money becomes prohibitively expensive. You cannot continue to finance this debt-laden system, which always has to continue to expand. And
Yeah,
that's why they are afraid of it. It keeps them up at night, I think, the inability to service the ever-increasing mountain of debt.
just one, oh, sorry, go ahead.
I mean, you can see. I mean, I just showed this chart to a different group that I had a class with a few days ago, and you can see. Just look at a chart of the S&P 500 since 1971 versus gold. Gold wins, and even if you look at a chart of gold since 2000 versus Berkshire Hathaway, gold beats Buffett. It just does. You know, it's not like that. Just proves that the entire system is an inflationary illusion.
Yeah, I agree. And just one final question that I wanted to, yeah, what's the question? Oh, yeah, I wanted to ask both of you guys, because we hear a lot of people saying, oh, commodities, gold and silver, they're going to crash because there's going to be a liquidity crisis, a credit crunch. But as Andy said, they reversed QT a few weeks ago by 400 billion. The Bank of England did QE last year to save the private pension system. So what's your view on that? I just think they won't let anything go anymore, and that's why I think you know, we're going to see commodities go through to the moon.
They've got their hands already on the spigots. It's not like 2008 where it happened. They're like, well, I don't know, what do I do now? And they had to like have a committee meeting on how exactly they're going to they know exactly what they're going to do. They're just going to they have their hands on the sinks already. They're just going to open it up. It's going to take, you know, an hour, and that'll be it. There's no time for any more deflationary liquidity traps or anything like that. I don't think.
Andy, what's your?
You know, I think, again, the ability to continue to suppress the price of gold and silver with any success becomes severely compromised in a world where the central banks are voraciously accumulating it, and they have been using the Western suppression to do so. I mean, if you realize that we hedge all of our production, all of our inventory, and it costs me just over $7,000 right now to control a 100-ounce gold contract in my margin account. So what they have been doing for a very long time is suppressing the price on paper, knocking it down on paper. If you have a $500 million in your margin account at 30 times leverage, that controls $15 billion in notional gold and silver. And so they can drive down the price by shorting it, and then they scoop up all the physical globally. And then they reach into their pocket and paper over their shorts. That's what they have been doing methodically, slowly, in order to drain the exchanges without causing too much attention. But you can't do that when someone says, I don't want it paper anymore. I want to stand for delivery. And I think, you know, when that moment happens, the whole thing blows apart. But it's becoming more and more challenging for them to suppress the market when it shoots right back up. And that just is indicative of all of these countries that use those opportunities, and our clients using those opportunities to accumulate physical. You can only do this so long until you can't. And we'll wake up on a Monday morning to a whole new reality at some point. But yeah, if they do it, you know, because it's obvious, and if you look at the COT report right now, the commercial banks are short gold right now. That's why they knocked it down on Friday. Well, who's buying it right now on the other side? And are they going to take delivery of it? And it just becomes a much tougher game. To me, it's a subsidy in an environment where, we should be happy things go on sale once in a while rather than lament them.
Great, guys. Thank you very much. It was really nice having both of you on. And thank you for all the viewers as well for your questions and your super chats. And have a great week.
You as well. Always good to see you, Rafi. You're the smartest mind in the business. And Mario, it's always